question is always, what is rich? So people always ask me, can it make you rich? Can it make you rich? It's like, well, depends from person to person is probably the first thing we need to look at. It's what is rich for you? For a lot of people, 20,000 Rand a month is rich. It's a lot of money because it is a lot of money. Um, but we have a lot of people where 20,000 Rand is not a lot of money for them. That's weekend money. So for them, rich is a different thing than for you. For a lot of people, it's like if they can just have time to spend for themselves with their families, etc., then they're rich. So a lot of people are chasing the rich of time, and a lot of people are chasing becoming rich of money. So to look at everything is, yes, it can make you rich in different forms, but you can obviously lose in different forms. So to always understand Forex for me and where you can be financially, I see it in this way. If I went to university, so I went to study BCom entrepreneurship. So if you actually look at the Forex trading market, it's close to $7 trillion market at the moment. So it is the biggest market on a daily basis. $7 trillion is going through the market every day. So that is a lot of money. It's a lot of capital as well. So if you want to become a doctor, how many people actually want to become a doctor? So let's say 100 people wants to become a doctor. From those 100 people, let's say 5% gets in to actually go and study to become a doctor. It's actually way less, most probably. So 5 people go and study to become a doctor. From those 5 people, two people actually become doctors. So it comes down to like a 2% conversion rate of those 100 people, and you can obviously scale it up. So with trading is mostly 80% of people losing, 20% of other people winning. So it is getting better. It used to be like 5% success rate. Now it's getting to 20%. So it is indicating that the winning rate is going up for trading. And I think it's because of all the resources we have available on a daily basis. So now it's just a lot of us don't want to go through the different phases. We just want to learn to trade tomorrow and then just become the number one trader in South Africa and obviously internationally as well. So the reason most people, for me, end up failing is they just want to skip that 4 years, even 2 years, 3 years, whatever it is, to actually become a full-time trader. So there's no specific time frame on how long it will take to become a full-time trader. I've seen people make it in 3 months. I've seen people try it for 6 years and still lose money. So it's not a certain person that can trade Forex. It's not a certain strategy that will make you a rich trader or losing everything. It's just to analyze yourself as a person and find something that actually works for you. That's the whole concept. So how I'm actually going to explain this whole thing is go into the market physically and explain how in the market you can do different money structures. So how can you make 1,000 Rand a month? How can you make 10,000 Rand a month? How can you make 100,000 Rand a month? And how can you make a million a month? So I'm going to explain the different structures, and then you guys can see where you as a person fit in at this moment.
Okay, so let's quickly take a look at the charts and basically explain the different options based upon the trades I took last week and the trades that were set out on the YouTube channel and the free Telegram. So let's say the average trader starts with like $100 account. Okay, so starting on $100 account, you're mostly trading probably on 1 cent, hopefully. As you wish, you don't want to over risk your account. It will lead to bigger losses. So this is the OGSD position we had. So we had a 210 point stop, so 21 pip stop, so that will equal to $2.10. That's what we were risking on this position. Let's say we didn't get out at the bottom, we got out about there. So we made 957 point move. So we did $9.57. That's what we made on this specific position. So it's about a 10% gain, which is a really good return on investment for this specific trade. So now to put it in perspective, let's say we're trading always, we take about, let's say 15 trades for the month. We win 10 and we lose 5. Okay, so on the 10 trades, we actually won. We had a minimum, let's say for more average risk reward of 1 to 3. What that means is every time we execute a trade, we're risking 1 and we're at least making 3 times the amount that we're risking. So this one was more like a 1 to 4, 1 to 5 risk reward. But on average, let's say we're going to do a 1 to 3 risk reward ratio. So that means that, for example, let's say we're risking, just going to say for this instance, we're risking $3 for every trade. And we're going to be making $9 every time we hit take profit. Okay. So now we took 15 trades and we won 10. So we made $90. We lost 5 of them. So 5 times 3, we lost $15. So for this month, we are up $75. Okay, so we made $75 for this month. So basically, people can obviously see that you're not going to become rich in this sense or make a lot of money if you have a $100 account. But what you need to see in this instance is this. You made 75% on your account. A bank on average gives you 6-7% minus all the other stuff. So you end up making 3-4% at best. So if you literally take that divided by 4, then you will actually know how much money you actually made. So you made about close to 19 times the amount that a bank will be giving you annually. So you made about 19 years of return in a month. So it is possible to obviously make good returns on the account. And obviously from the year, it's all about scaling. So then if you had for example, $1,000 account, you would be making $750 for this month. And $750 gets close to the average salary in South Africa. And that's how you actually get ahead. So taking in consideration that not every month is going to be a good month, you're not going to be profitable every month. You're going to have months where you hit a break even. So there's multiple things to always take in consideration. But the best thing to do is obviously if you get to a point where you only have $100 starting at first. So for you to actually know what is realistic and what the aim is saying, well, where am I currently in my life? I'm currently sitting at $800 per month. That's my salary every month, and that's what I need to actually replace my job. So step 1 is always break even. Find to get to a point where you can break even with your salary, because if you can make your salary from home, then obviously you can be a full-time trader. Number 2, one thing that I always say is have at least 6 months covered. So for me, if I want to go full-time, and when I went full-time, I had 6 months worth of expenses covered. So already in a savings account, ready, my rent, my car, all those things covered for that part. And that is without your trading account. The reason for that is that takes the stress of the psychology in your brain. Because now you don't have to stress every month. Well, if I don't make my targets, if I don't make under $800, I'm not going to be able to survive. As soon as you get into that mindset, a lot of people always say with their back against the wall, they're at their best, and I also feel like that, but not when it gets to expenses. It's a whole different game, and you don't want that stress on you to push a trading account, because a trading account is not something that you can predict or know exactly where it's going. You can obviously set goals and targets, but realistically, you need to have 6 months covered so you can actually build up that amount. So Now, how much money do you need to actually make $800? So that is probably the best question. So let's say you have $2,000 in your account. Okay, that means you need to make 40% this month. Okay, so that's what it's literally just a scale. If you have $8,000, then you only need to make 10% this month. So it all comes down to the scale of what you're really looking for. Then it gets to a point where you can actually become better over time. In the beginning, what you are after is nothing else than break even. Not looking to make $1 million a month or 10 million a month. You are literally just looking to replace your salary. So now you're getting to a point where for that 6 months, you made, let's say you made the $800. So now you have $800 times 6. So now your account is sitting on $4,800. But now you need to start covering because now the 6 months is gone. Now you can actually trade with the $4,800. So now a 10% month, $280. 20% month obviously is a $960 month. So you literally just need to make 20% now this month to survive and to grow. Okay, so if you actually have a good month like we had in the beginning, then obviously from there it's way easier because then you can actually make a few times your salary. Okay, so that's the two things. And then how do you grow an account? So growing an account, number one, once again, starts with consistency. Trading on a demo, learning how to make consistent good trades. Then from there, it's about scaling. So let's say for this is one of the trades that I took, also posted on all my social platforms. Let's say on this account, I was risking, let's say $12. Okay. So now that's the total risk that I'm taking. So the stop loss is about, let's say $3.50. So it's $3, $3.5 on a 1 cent. Okay, so the first entry I'm going to take is 0.01. Okay, that's my first entry. But I'm going to add entries lower as well. So this is actually how I used to grow small accounts. I'll identify the spikes over there. So you already know the clear direction. If you don't know why we're buying this trade, go and look at the Monday Madness videos. Okay, so now I'm going to add 1 cent over there. Price pushes down. I'm going to add a 2 cent trade. Then if price pushes more down, I'm going to enter a 3 cent trade. The reason you're scaling up is because the lower it pushes, the lower your risk. So now on that trade, you're risking, okay, just wait for it to load. You're risking a 1 cent and your target, let's say, is there. So it's a perfect, let's just do a 1 to 3 even. We don't need a 1 to 5. Let's just do a 1 to 3. So if you're going to be risking $3.5, you're going to be making 3 times that. So it's about $11.5 in that position. Okay. Now the second trade, you have a 2 cent in. So your risk is 2 to 7. So you're going to be risking $4.5. Okay. On the second position. But if it plays out, you're making 5 times that. So it's 4, 8, 12, 16, 20. So it's $22. Okay, now finally, the final one, you're only risking, let's say, 100 points. Okay. So now it's going to be $3. Okay. So if you risk $3, you're going to be making 14 times that. Okay. So now if we take 3 times 14, so it's $42. Okay. Just one position. We don't have to have multiple positions. So 42 plus 22 plus 11.5. So just on this trade alone, you can make $75. Okay, so this is basically using a multi-entry strat to push up your well, not only your risk reward but also your profits, because on this trade you would most probably be risking close to $10 and you're going to be making $75. So you ended up having a $100 account, okay, and you were risking 10% of your account, and you ended up making $75, which is 75% on your account. And now the key thing is, once you get to $200, then it becomes a different ballgame. If you get to that point, then you're risking $20, and then you're going to start with the 2 cent, then with 4, 5 cents, and then 6, 7 cents. So then you're going to be making $140, $150 on a trade. And the good thing is, if you lose this trade, so let's say you took this trade and you actually ended up getting stop loss, that means you're only $10 down, so you still have $90 left to trade with. So now you took a position on GP order. Same thing. So now you lost $10. Here you had that entry running. I already have it in. And you were risking 319 points for $3.19, and you made about 4 times that. So you made $12. Had a buy order lower, risked $5, and you made $25. You made about $40 in this trade, but you were only risking way less, obviously, like $5 in this specific position. So just like that, even with a trade, only 2 orders that was triggered, not all 3. If that one was triggered, obviously the profits would be different. Just having 3 orders triggered, 2 orders triggered, you're already making $40, $45, $50 back into your account. So you're basically just helping yourself push forward. So that's the key thing to growing a small account. And in the end, the bigger your account, the smaller your risk can be. Because obviously, if your risk is smaller, number one, you're trading more stably. You don't have that risk or that stress on you the whole time, and you don't need to make a lot of money. So a lot of people that's sitting on like 100K account, if they make 10% a month, they're making 10,000. If you're sitting on a million rand account, if you make 10%, you're making 100K. So it's just a scale then. And a lot of people don't like going through that scale. So now they actually go and they take their $100, they put it into their account, and they just risk it all for one trade. Now you blow your account, you have to wait the next month, you do the same thing. And only after month 6, you keep losing $100. Month 6, finally the one trade plays out. You make $400. And you're like, so happy, so hard because you make $400, but you already lost $500. So in the long run, you're not profitable. That's why I say it's so critical to have the right risk management plan and just to start scaling up and up and up and up. The thing is, you can't put in $100 and expect to make R1,000,000. It's gonna take you a long time. But you can also not put in R1,000,000 and expect to make R1,000,000. If you're putting in R1,000,000, you don't need to make R1,000,000. That's the whole point of the whole trading. So hope this helped you guys just to guide you on actually what to do with specific accounts, how to treat different accounts. That also helps you guys with some risk management, but also how to grow some small accounts as well. Thank you for always supporting. Thank you for always watching. Then I will see you guys on the next one.